Hey guys, how you doing? This is Rich from Rich TV Live, and today I'm going to be speaking to you about Health Technologies Corp. Here's their website, www.well.company. Big fan of Health Technologies Corp. I've been doing a lot of research, doing a lot of due diligence, learning more about this company, and it just seems like they're doing everything right. Everything that I look for in a company, these guys are doing. And I honestly think the potential for these guys is astronomical. And I'm going to break down why. We're going to go through it and I'm going to break down why today. So hopefully you guys like this video. If you do, please smash the like button, comment down below, share the video everywhere, and subscribe. Health Technologies Corp is the name of the company, and WELL is the symbol in Canada. WLYYF is the symbol in America. Now, remember, Rich TV Live is strictly for education and information purposes. Please do your due diligence, do your research before you invest in anything that we talk about here in Rich TV Live. Always invest in the best. The best is blessed. And I believe that Health Technologies Corp has an opportunity to be absolutely one of the best. How you doing? Diamond Hand YOLO. I think they have an opportunity to be absolutely one of the best. Let's take a look at the stock. You can see the market will be opening up in a few minutes, and you can see that Health has gone from $1.20 right here on May 1st, 2020, almost a year to the day. It was at $1.20, and today it sits at $7.66 in Canada, been as high as $9.84, which was what I consider the high, the all-time high for the stock. I do believe success leaves clues. I believe this is where the stock will go and beyond. So this could be an incredible opportunity for investors, but I actually think that this has a chance to go way higher than that. I do, and I'm going to break down why. We're going to go through the news. We'll take a look right here at the stock as well, but this is a company that I think has incredible potential. And here is the chart in America. Very similar. You can see it's trending up. It's been as high as $8 in America, currently at $6.21 in America. Market will be opening up in a few minutes. This is Health Technologies Corp. Good morning, Pluto Mines. Good morning, Bentley LaFleur. What do you guys think about Health Technologies Corp? Please put it on your watch list, put it on your radar. I think this company's potential is outstanding. Absolutely outstanding. So let's just read a little bit about their vision. At we believe that the future of primary healthcare is heavily influenced by technology with a greater immersion in digital experience for both patients and physicians. We see an opportunity for to play a role in supporting these enhanced experiences by leveraging our efforts to reduce fragmentation and enhance digital interoperability. Key focal points for will be cutting-edge technologies such as telemedicine and a robust and extended EMR. So this is what their focus is. We want to help support a healthcare system that provides a greater depth of tools and resources to patients and physicians, such that we can go from treating sickness to preventing sickness. So you can see the business. Well's business is different. We are the owner and operator of the largest single chain network of primary care clinics in British Columbia. Additionally, we provide EMR, electronic medical records, services that support hundreds of medical clinics, thousands of doctors, and millions of patients. Together, both sides of the business, the clinical and digital, allow us to create effective change and make a positive impact on healthcare in Canada. So you can see the digital portfolio has 10,000 doctors. The clinic portfolio has 180 doctors. So this is a company that is just enormous. What is the strategy? Well's unique approach to alleviating under digitization and modernization is rooted in its ability to leverage its clinical and digital assets to improve technology interoperability challenges that get in the way of digital uptake. Supported by an experienced management team and board, Well is pursuing a proven M&A strategy that targets assets with high accretive value to shareholders. Because we're both a clinic operator and technology developer, we combine professional health expertise with advanced digital platforms to scale our business. Let's quickly learn more about that. You can see the objective and strategy. So what is the problem? Situation, why do we exist? Despite the influx of technology in our everyday lives, the Canadian primary healthcare system is lagging behind. An under-digitized industry results in under-imagined capability, and the lack of modernization has resulted in frustrations and inefficiencies that plague primary healthcare. Patients face long wait times, fragmented healthcare records, and they play a passive role in their personal well-being. Physicians are overworked, especially right now with the COVID-19, burdened by operational challenges, and are faced to limit their healthcare offerings to keep their clinics running. At the same time, however, government investment in healthcare is growing each year. In 2017 alone, the Canadian government spent $242 billion on care delivery, representing 11% of our GDP. The industry is ripe for disruption, creating significant opportunity for WELL to innovate and evolve primary healthcare. What is the solution? So this is where WELL Health steps in with the solution to the problem. And this is what I like: disruptive companies, companies that are solving a problem. That's what this is about. This is all about companies that are solving a problem. And Rich TV Live likes to identify undervalued, underappreciated, underexposed companies first that are disrupting an industry, disrupting a sector. The solution, we are going about it. WELL's solution to this problem is unique. We are both a primary healthcare operator and a technology innovator, allowing us to combine professional healthcare expertise with technology to better empower physicians and patients, resulting in improved experiences and healthcare outcomes. We envision a future where technological advances such as telemedicine, I love telemedicine, artificial intelligence, and machine learning can make our healthcare system more efficient, better connected, and more individualized. Using the best and latest technologies, our goal is to revolutionize the market and to raise the standard of care. Lita Vaza says, thank you for your work. I really appreciate every minute that you spend researching, discovering new great future companies. Hey, I appreciate you. This is why I do it. You know, we've got a trading club as well, and that's what we do. We're consistently in our trading club looking for undervalued, underappreciated, underexposed diamonds before they explode. We're looking for dip buy opportunities. And I always say, buy the dips, sell the rips. Don't chase green. Put a company on your watch list that we talk about, put it on your radar, buy them when they're down, sell them when they're up, build your vault, build your treasury, build your balance sheet. Just like a bank or just like a public company, you're building a portfolio. Treat your portfolio like you're building a balance sheet, like a business or a bank would, and grow your business and make sure you have some great companies in your portfolio. And I think WELL Health Technologies is one of those companies. So the strategy is outlined in 5 steps. Acquire, they're acquiring their growth. Integrate, optimize, productize, and scale. So let's talk about how they acquire. WELL is an active acquirer of both digital assets and primary healthcare services. Our acquisition targets are highly accretive, physical and digital assets. We are the largest single chain of primary healthcare clinics in British Columbia, which gives WELL both the scale and experience necessary to integrate, optimize, and ultimately productize effectively. You can see the latest news right on their website, and we'll go through that as well. Let's go through their fact sheet here. See if we can see some of the key statistics for WELL Health, which I'm going to break down for you. Hey, Robert, how you doing this morning? Hey, I appreciate your support, Robert. It means a lot. Thank you, man. It's Playa says, morning, Rich. Most of my diamonds came from Rich TV picks. Hey, brother, from your lips to God's ears, my friend. I appreciate you. And all I want is for everyone that's watching Rich TV Live, anyone that's part of our community, whether you're part of our trading club or you're a member on social media, we want you to have abundance. I only want everyone to have abundance. I can't guarantee that every pick we talk about is going to scream and going to be a winner, but I think our track record speaks for itself. We've had a really good track record, and we really want to maintain that track record as we grow and evolve, in my opinion, to the greatest trading community on the planet when it comes to stocks and cryptocurrencies. In fact, I don't think anybody's even close. And it's because we're able to find these types of companies before they explode. I mean, this was at $1. It's now at $7. And I think one day they have a chance to be way higher, way higher. But remember, we're not licensed. Please do your due diligence, do your research, consult a financial advisor before you invest in anything that we talk about here in Rich TV Live. Let's talk about the Well Health fact sheet and their statistics. So the number of health clinics, 27 health clinics. That's massive. Doctors at Well Clinics, over 200 doctors. Clinics on EMR network across Canada, 2,200 clinics on EMR network across Canada. Practitioners supported on the EMR network, 10,700 practitioners supported on the EMR network. That is just an incredible number. Registered EMR patients, 15 million plus. That is just mind-boggling and a staggering number. Practitioners supported on telehealth, 2,800. Monthly virtual care visits, 66,000 plus monthly virtual care visits. And number of apps supported on apps.health, 26. Practitioners supported on billing and back office, 2,000 plus. Unbelievable. Huge, huge business. The business of Well Health is absolutely enormous. Look at the capital structure. So this is where I get really excited when I think about Well Health. So the trading symbol is WELL in Canada on the Toronto Stock Venture Exchange. And this is a company that will be doing an IPO in America. And we've seen recently what happens with Mind Medicine when they did their IPO on the NASDAQ. The stock has gone up over 100%, literally in a few trading days. What will Well Health do when they do their IPO in America on a major exchange? So we see them right now as WLYYF in America. The share price we've shown you guys right now is currently in America right around 621, and in Canada right around 766. And as the market opens, that could change. So the basic shares issued and outstanding, 163 million shares issued and outstanding. That's a tight share structure for a company of this size. Their market cap, I believe it's around a 1.2 billion market cap right now. And you can see their 52-week high, $9.84. Their 52-week low, $1.20. And you can see the chart. This is a stock that's been trending up. They've been trending up. Great leadership team. You can see here their leadership team led by Hamid Shabazi, the chairman and CEO. You can see their leadership team, a deep team with years of experience in business, having tons of success. They've got a proven management team, and they're also backed by the 43rd largest, most richest investor in the world, Mr. Li Ka-shing, who's also invested in other projects that we've talked about here on Rich TV Live. I'm a big fan of Li Ka-shing, and he is backing the company. So when you have one of the 50 richest people in the world backing your company, and he's got skin in the game, you know that they're doing something right. Well is a rapidly expanding company and continues to acquire both clinical and digital healthcare assets. In 2019, Well reported record revenue of $32.8 million, representing an increase of 211% compared to the prior year. More recently, Well reported a record quarter for Q3 2020 with revenue of $12.2 million. And in December 2020, the company announced it's achieved an annualized revenue run rate of over $94 million. And with all the business that they're doing now, it's mind-boggling. I'll get into it, but they could do an excess of $284 million this year. Isn't that insane? They could do up to 284, could be a little more, could be a little less, but they're projecting that they could do up to 284 million in 2021. 284 million. I think it's extremely undervalued compared to their peers. Obviously, they're just getting started, so the upside is tremendous, reasonable tight share structure, and I think the upside is tremendous for this company. Absolutely love Well Health and love everything these guys are doing. Very impressed with this company. And I love impressive companies. I mean, who doesn't love impressive companies? This is a company that's doing it all, really. They've got it all, they're doing it all, and they have a chance to be really, really special. Now, we're going to go through some of the news because the news has been just mind-boggling. Let's go through it. And I love it when companies are just putting out news and the news is just game-changing news. If you guys don't know, we're Rich TV Live. Make sure you never panic. If you're learning how to trade and you're not winning, you're probably not watching. If you're watching, you're most likely winning. There's no reason to panic. Rich TV Live is here. We will help you and we will help you have success. Don't you worry. Diamond Hans Yolo says, have been holding Well, TAT, GDNP, NEXE, and Green Lane for a while. Way higher. Go. Hey, man, you got some great picks there. Well done. Hey, Kyokushin Trader. How you doing, my friend? Hope you're having a great day. Kyokushin, you need to put Well Health on your watch list, put it on your radar. These guys are an absolute juggernaut. So let's talk about some of the news that these guys have recently put out there. So Well Health provides an update on its proposed acquisition of CRH Medical. So CRH Medical security holders approved the acquisition of CRH by a subsidiary of Well Health at a special meeting of CRH security holders on Friday, April 16th. So not too long ago. The transaction is expected to be completed on or about April 22nd, 2021, and represents Wells' largest acquisition to date, with a total transaction value of approximately US $369.2 million. Incredible. Upon closing, subscription receipts from Wells' previously announced $302.5 million equity offering will be exchanged into common shares of Well. So this is an absolutely enormous acquisition, and this is a deal that's transformational for the company. Hamad Shabazi, chairman and CEO of Well, commented, "We're very pleased with the approval of our acquisition of CRH by CRH security holders. We're very excited with the imminent closing of this transaction and look forward to adding CRH to the Well family. Once the acquisition is completed, CRH represents a significant opportunity for Well as it is, and it will significantly boost Well's revenue and profitability and provides Well with additional inorganic and organic growth opportunities, including a meaningful channel of over 3,000 physicians to offer its digital tools, tech enablement, and data protection services. CRH is expected to generate significant cash flow for Well for many years and meaningfully elevate our capital allocation program across a number of attractive healthcare and healthcare technology segments." Huge, huge, huge. The acquisition is partially funded via subscription receipt, equity offering of approximately $302.5 million at a price of $9.80 per subscription receipt, which was led by Hong Kong businessman and investor, like I told you guys, one of the 50 richest men in the world, Mr. Li Ka-shing, and included Wells' CEO board and senior management team, as well as a number of significant institutional investors. Everybody put skin in the game, folks. The offering was structured as a non-brokered offering of subscription receipts and represents, they did this at a 25% premium to the 5-day VWAP, 5-day volume weighted average price of Wells common shares on the Toronto Stock Exchange, preceding the announcement on February 8th, 2021. So they did this deal at a higher price than the stock was trading. That's how much they believe the price is going to go up. That's unbelievable. In my opinion, this is extremely, extremely exciting company and an extremely exciting deal. And I think that the upside for this company is tremendous, absolutely tremendous. And then you can see what happened on April 22nd. You can see that this is just flowing, right? Boom. Well Health completes acquisition of CRH Medical. There it is. So they announced it. They announced that they're going to be closing the deal. And a few days later, boom, the deal gets closed. Monumental acquisition significantly boosts Wells' revenue and EBITDA profile, dramatically enhance its U.S. operations, and provides WELL with additional inorganic and organic growth opportunities. You can see here, CRH recently reported its audited Q4 2020 results with $36.8 million in quarterly revenue, huge, reflecting a 21% year-over-year growth. So they just acquired a growing operation. CRH adjusted operating EBITDA for the same period was $16.1 million, demonstrating strong 44% adjusted operating EBITDA margin. Incredible. The acquisition of CRH meaningfully enhances WELL's free cash flow profile, enabling future reinvestment, capital compounding, and capital allocation opportunities across other attractive healthcare and healthcare technology segments. This just takes this company to the next level. Look at this. WELL Health Technologies Corp, a company focused on consolidating and modernizing clinical and digital assets within the healthcare sector, and CRH Medical Corporation are pleased to announce the successful completion of their previously announced business combination today, pursuant to which WELL will acquire all of the issue and outstanding common shares of CRH for US $4 per share, representing an equity consideration of approximately $286.6 million and a transaction value of approximately $372.9 million, inclusive of CRH's credit facility. I mean, massive. This is just so massive. I'm not going to keep talking about the same stuff, but you guys can see here that this is just unbelievable. And they're kind of reiterating some of the stuff that I've talked about. Huge. And let's take a look at the next news that came after that. So WELL Health reports on CRH Medical's upsized $300 million revolving credit facility with JP Morgan. Wow. So now they're working with JP Morgan, guys. Isle Devaza says, I like this company. It's time for deeper research. I think you should. I think it'd be silly not to. I mean, look at the huge people that are investing in this company, guys. You know, JP Morgan, Li Ka-shing, investing at a discount to market. That means we can get in at a discount to market. Concurrent with the completion of WELL's acquisition of CRH Medical, JP Morgan Chase has provided CRH Medical with a US $300 million credit facility with joint book runners, Canadian Imperial Bank of Commerce. So you're telling me that JP Morgan and CIBC are giving a $300 million credit facility to CRH Medical? Guys. Oh, and HSBC Bank Canada? Do you not see these are some of the biggest banks in the world that are providing funding for CRH Medical, which is now a subsidiary of WELL Health Technologies? This is enormous. This is enormous. This credit facility replaces JP Morgan's previously $200 million debt facility for CRH Medical, which means they just gave them an extra $100 million. The new $300 million credit facility includes a committed line of credit of US $175 million and accordion of US $125 million, and provides CRH with substantial capital in addition to current drawn balance to continue its disciplined and highly successful merger and acquisitions program. Wow. Incredible. This new facility matures in 4 years, carries a floating interest rate predicated on the US prime and LIBOR rates, generally based on customary terms of credit, similar credit arrangements in the United States healthcare sector. The new facility is provided by a syndicate that was led by JP Morgan, CIBC, and HSBC Bank Canada. Those are three of the biggest banks in the world. The lending syndicate also includes Wells Fargo Bank, NA, and the Bank of Nova Scotia, and US Bank National Association, another three huge banks. This is incredible. Absolutely incredible. Hamad Shabazi, chairman and CEO of WELL, commented, "We are pleased with the support and confidence that JP Morgan, CIBC, and HSBC and the rest of the lending syndicate have shown in increasing CRH's credit facilities. CRH is extremely acquisitive, and we are committed to continuing its active acquisition program, which aligns perfectly with WELL's own highly accretive and disciplined growth and capital allocation strategy. The new debt facility, combined with CRH's own profitability and cash flow generation, will ensure that we can continue to allocate capital and increase Wells' overall inorganic growth profile. This is huge. These guys are going to take this $300 million, I'm telling you right now, and they're just going to go and acquire businesses. This is a mini Berkshire Hathaway, guys. They're just going to acquire businesses. I can see it already. It's what they're doing. That's what they're saying. I mean, success leaves clues, guys, and you can clearly see that these guys are doing all the right things. I mean, it's very impressive, extremely impressive what these guys are doing. Let's look at what the investor information is. Okay, so you can see the shares issued outstanding, 163 million for a company this size. I think that is actually extremely impressive. Market capitalization of 1.2 billion market cap. Currently at 773, up a little bit on the day, just tiny volume so far. You can see the share price, how it's moved. All the different analysts already covering this company. Some big analysts on the street covering this company. Okay. And let's take a look at some of the news that just came in. So yesterday they had news as well, right here. Well Health announces a normal course issuer bid. This is huge. This means the company wants to buy shares. Check this out. Well Health Technologies Corp, a company focused on consolidating and modernizing clinical and digital assets with the primary healthcare sector, today announced it has filed its notice of an intention to make a normal course issuer bid, NCIB. I've told you guys about other companies doing this with the Toronto Stock Exchange, the highest tier exchange in Canada. The NCIB remains subject to approval by the TSX. And why wouldn't you approve that? Well believes that the share purchases pursuant to the NCIB will contribute to facilitation of an orderly market and be in the best interest of the company and its shareholders. Thank you, Well Health, for protecting its shareholders. In the event that Well believes that its common shares begin trading in a price range that does not adequately reflect their underlying value based on Well's business prospects and strong financial position, Well may purchase shares pursuant to the NCIB depending upon future price movements and other factors. Well believes that its outstanding common shares represents an attractive investment and a desirable use of a portion of its corporate funds. At the opening of the stock market on today's date, the company is expected to have 195,161,273 common shares. So the shares have grown, issued and outstanding under the NCIB. If approved by the TSX, the company may acquire up to an aggregate of just under 5 million shares, 4,879,031 common shares over the next 12-month period, representing approximately 2.5% of the issued and outstanding common shares of the company. So they are protecting the share price and the shareholders by going out there and sitting on the bid, and they can soak up to 5 million shares over the next 12 months if approved. So obviously this needs approval by the Toronto Stock Exchange. I don't see why they wouldn't approve it, but this is big. It means that they're protecting shareholders and they're protecting the price, which is important, obviously. So let's take a look at some of their milestones. We obviously just talked about Well Health completes acquisition of IntraHealth, an enterprise class EMR provider with a global network of healthcare customers across Canada, Australia, and New Zealand. That was on April 4th. On March 15th, Well Health makes a seed investment into Twig Fertility Co., startup fertility clinic looking to create next generation of fertility care. In February 17, 2021, Well Health completes an upsized 302.5 million equity offering led by Mr. Li Ka-shing and includes several large institutional investors. January 8th, Well Health acquires Open Health Software Solutions, Inc., an Oscar service provider to medical service primarily located in Ontario, and successfully transitioned all of Clear Medica Corporation's clinics through a customer purchase agreement. This is just so far in 2021. This is how many acquisitions these guys are doing. Well Health acquires Adracare, Inc., a comprehensive omni-channel practice management platform serving over 6,800 allied healthcare practitioners in 5 countries. So you could just see the news just keeps going and going. These guys are just hitting all of their milestones. I'm not going to go through all of them, but you guys can find this all on their website. It's just like nonstop, guys. Like these guys are nonstop. Okay, let's see what events has to say. Upcoming events. You guys can go and see up their upcoming events. Let's go to About Well. So what is their vision, values, and focus? Our mission is to positively impact health outcomes by leveraging technology to empower and support patients and doctors. I think we know what their values are. We've gone through it. Social responsibility. Investor information. We went through all that. You can see their social responsibility, financial, people, environment, and community. So WELL functions on a quadruple bottom line principle. We believe that financial statistics are not only the measure of performance. In fact, we track our key performance metrics in 4 main areas. So you can see that these guys are on point. Innovation through technology. Love it. Purpose-driven company, and empowerment. So I love what these guys are all about. This is a company that has values. This is a company that is operating like a bank. They're operating like a bank. Okay. You can see all the different areas of business. You can see their clinic network. So huge network of clinics. These are all their acquisitions, and you can see they're all accretive, huge acquisitions. I'm not going to go through all of them. There's so many, but these guys are literally acquiring their growth. And now with a revolving facility of an additional $300 million, I just believe they're going to acquire more. Clearly, I believe they're going to acquire more. So you can see all of their different locations. I mean, the website is just a fountain of information. Now, if you guys like this video, please smash the like button, comment down below, share the video everywhere, and subscribe. Love to know your opinion on WELL Health. And do you own the stock? Are you considering owning the stock? Have you bought it in the past? What are your goals? I'd love to know. Let's see if we can learn more here. Acquire, integrate, optimize. We went through this. So that's the website. And you can see here, it says here that the shares listed issue notes then are 163 million. I don't believe that's updated based on the news. So it is just under 200 million now, which will increase the market cap. You can see right now, WELL is currently at, let's see if we got update on the price. That's the fact sheet. And let's see if we have an update on the price. So based on this right now, it says the price is actually has gone as high as 774 today. It's actually dipping right now at 751. That dip might be a buying opportunity. Could clearly be a buying opportunity. And let's just see. Well, in America, also on a dip, a little dip here at 620. That might be a buying opportunity. What do you guys think? Kyokushin says this stock is another bomb. When did it IPO? Well, it's been around for a little while. I know in the last year it was at $1, and you can see the trend here in America just trending up, and the trend in Canada also trending up. So this has been a rocket, and I don't see any reason why this can't continue to go much, much higher. Now, the rich system is we like to buy the dips, sell the rips. So clearly, if it's in the red, that's when you're looking to buy. And if it's in the green, that's when, in my opinion, you'd be looking to sell. This is the US symbol, WLYYF. Currently on the pink sheets in America, they are looking to IPO in America. And I think that that will be a huge catalyst for this company in America. Because when you compare them to their peers, they are literally grossly undervalued when you compare them to their peers. Let's go to watch our video. Let's watch this quick video, guys.
WELL exists to solve some of the problems that are getting in the way of digitization and interoperability in the Canadian healthcare space. At the core of this problem is extensive fragmentation in the business model of primary healthcare. And that fragmentation can be solved with scale accumulation across clinical and digital operations. This is uniquely part of WELL's business plan. We're very passionate about this because we believe that increased digitization yields better outcomes. We're currently the largest clinic owners and clinic network in the province of British Columbia. We're very intent on growing our regional footprint across the country and being a national platform that allows us to ultimately make the investments in technology and be able to amortize those investments across a wider substrate. Our overarching goal is to create a well-curated repertoire of products and services that better position patients to address chronic disease and ultimately lead to better outcomes. Think about precision medicine as customized care, a medical model that's informed by a person's very unique characteristics, such as their genome, their proteome, their biome. These characteristics are loaded into a model that informs treatment and care and results in better outcomes. We're not just aggregating clinics, we're also investing heavily in digital. While healthcare in Canada is very accessible and affordable, a lot of times what we find is that patients are paying with their time. And so we're acquiring digital assets that are not just electronic medical records assets, but also patient engagement assets. We're very proud to already be a player in the electronic medical records space. We support hundreds of clinics, thousands of doctors, and millions of patients across the country. Our people are our greatest asset. The company is driven by a strong and proven management team and backed by a deeply experienced board of directors. We're also honored to be backed by incredible institutional investors such as Sir Li Ka-shing and his partner Selena Chow. Mr. Li and Selena have not only made some incredible investments such as companies like Facebook and Spotify, but they're also incredible philanthropists and are very involved in the life sciences. A foundational part of our business are our values. We're a quadruple bottom line company, and we're very proud of that. This means that we don't just pay attention to financial metrics. We're also focused on metrics such as people, environmental, and community. WELL is diverse and service-oriented. At the heart of that is empowering our team to get out in the community and be participative. One of the things we're doing to really encourage that is pledge 1% of their time on a paid basis to do anything they possibly want to support their communities. We have hundreds of people that provide care for our patients every single day. And I can tell you without a shadow of a doubt that each and every one of them is striving to create the best outcomes humanly possible. We understand that people visit us at a time of personal grief. As service and care providers, that's what we do. We are designed to care and be there for you. Everything that we do at WELL is designed to put people back in control of their healthcare. This means empowering patients to take a greater role and interest in their own healthcare. Studies show that anytime that happens, outcomes improve dramatically. The problem is people are not empowered. They don't have the tools. And that is what WELL is aiming to change. That is what true healthcare is. And that is what we are focused on.
Pretty wild, guys. I'm really impressed. And I think everyone needs to put this watch list, put it on their radar. If you like the video, please comment down below. Let me know what you guys think. If you like the company, please comment. Let me know what you think. We had a question, why did the company stock go up? Well, I mean, I've been bringing the news to you guys, and I think I made it pretty clear, but I mean, we can do it again. This is why, guys. They just closed a massive deal. Well reports on CRH's medical upsized US $300 million revolving credit facility. They closed the deal with CRH Medical. It's a massive transformational deal for the company, which is going to put millions of dollars on the company's balance sheet and EBITDA and cash flow in the company. And that's why the stock has started to do better. But the reality is it's been higher. It's been even higher. So I think this company goes way higher. Yeah, short term, we may see some short term selling, but long term, I think this could be a rocket, an absolute rocket. I like everything I see. I'm extremely impressed. Impressive management team, reasonable, strong, tight share structure for a company this size. Lots of money behind them, money in the bank, credit facilities, and a run rate based on my research that could be in excess of a $284 million this year for a company trading at $6.20 in America and $7 in Canada. I just don't see why this doesn't have a chance to be way bigger, way better, in my opinion. And I'd love to know what you guys think. Please, if you like the video, smash the like button, comment down below, share the video everywhere, and subscribe. Currently, Well Health at $7.49. I'm hunting this stock, watching, $7.58. I'm watching this stock very, very closely. And this is one that I think, I know we're going to be suggesting to our community that we've already added it to our core picks. And our goal is to create somewhat of a fund. And this is going to be part of it. This is a company that I think the upside is tremendous. You can see the trend is up, and I think there's no reason why it doesn't continue. So love to know what you guys think. This is Rich from Rich TV Live, bringing you Well Health. Thank you for watching. Well Health Technologies Corp. If you're not winning, you're not watching. We bring you the winners, and we bring them to you first. I think Well Health has incredible upside. What do you guys think? Comment on the video. Let me know your feedback. Do you like the stock? Do you plan on buying the stock? Do you own the stock? It's already been a rocket, and I think it goes way higher. Thank you for watching. If you're not winning, you're not watching. We bring you the winners, and we bring them to you first. This is Rich from Rich TV Live. Have a nice day, everybody. Invest wisely. Invest in the best. The best is blessed. And I believe that Well Health Technologies Corp has an opportunity to be absolutely one of the best. When you compare them to their peers, they're grossly undervalued. Thanks for your time, everybody. Have a nice day.